Let me now also welcome on board Neeraj Dhiman and ask him about what he's making in the markets right now. Neeraj, hi, morning. Great to have you on the show. Neeraj, the rest of the market looks okay, ex-IT. When do you think the negative news flow is going to at least stop when it comes to IT? And when will the selling abate, if not buying, coming in?
Yeah, good morning. Thanks for having me on the show. So as far as IT is concerned, so we've been cautious on IT after the updates that they gave up after the March quarter results. So the companies only were not so positive about this year. So I think that is what is reflecting the kind of selling we've seen there. Basically something has to come from the companies to get some confidence back into people because see, the guidance was not so great. So selling has been continuing, but after falling so much, I think selling should stop now. Looking at the valuation Infosys is trading at, the kind of massacre we've seen in some stocks like Wipro, I think they should reach a base where I don't know, even if you have 5 to 6% growth, this valuation should sustain. So I feel that though one should not be in a hurry to buy, one should get some more clarity, some positive momentum coming back into the stocks. But for a trader, maybe some trading bounce back may be around the corner, because we've seen earlier also after falling, there's always a trading bounce back which comes in IT stocks. So that may be around the corner, but for a fundamental, and for a fundamental investment view, I feel that I will still wait to see get some clarity. But when you see in IT also, there is one pocket. You've seen, the product-related software companies which have been doing considerably better than the other companies. Just to give an example, like Oracle, for that matter, has been doing quite well as compared to the other IT stacks. So one can be little stock specific there, but I think overall there can be still some more consolidation.
Okay. Give us a sense on what the growth numbers within the banking system are suggesting, Neeraj, because they're obviously extremely strong. Sustainability of that, your opinion, and economy otherwise looks in fine fettle.
Yeah, actually, the kind of fall we've seen in the crude prices is very positive for us, very positive for our inflation. So the fear of interest rate going up may come down a bit. So I think earlier we were expecting that there can be some, rate hikes coming very soon, but that may again be a little down the road, may not come now. Looking at the fall, and I think inflation should also stay under control after this kind of a correction in the energy prices, and that of course will have their cascading effect on other products also. So I think that growth is good. The numbers which have come from some of these banks updates are also very good. We've been, I think there has been a consensus that financials should do well. I think that consensus should hold. Even the public sector banks, some of them have come out with good updates. They also look interesting, even after some upside that we've seen recently. And some of the private sector banks also, I think most of the negatives are getting priced in. Some of the private sector banks, the large ones, we've seen ICICI Bank also contributing, doing well now. So I think that banking space should remain strong, and I think inflation only niggering, only worry would be the monsoon, which there can be a shortfall there. So let's see how much that has an impact. So that is the only worry that was there. Though other parameters look strong, and even auto numbers have been very good.
Okay. Let me have your take on auto. Where is your preference? Where does your preference lie within the auto pack, Neeraj?
See, lately I've been positive on the commercial vehicle space. I think that is where I think the numbers should improve going further. Even auto ancillaries related to commercial vehicles should do well because there are strong order books across infrastructure companies, across sectors, and once this energy availability, that is also improving now. Crude availability is improving. So once those things are happening, I think commercial vehicle space can do better than the normal passenger vehicle space in the short to medium term.
Interesting. Okay, just looking at some of the other newsmakers as well. While of course banks, IT are going to continue to sort of dominate the market. FMCG, that's been a really, really interesting trend. Kunal, of course, had a buy on Nestle, and sure enough, don't recall the last time Nestle was one of the top 3 movers in the index and moved a good 3 or actually over 3%. It's back at that 1450 odd levels. Unilever held out very smartly. You had a Dabur which had a very, very strong move as well. And while for the previous year or the previous month, the monsoon has been subpar, finally it seems that, the pickup is taking place, not just in Mumbai, but it seems that North India as well is going to be welcoming rains in just a matter of 2 or 3 days or so. But Neeraj, what's your own take on how some of the pure staples should be treated right now?
See, my view is positive. We will not see too much of a move in some of the FMCG names. And I feel that if inflation is coming under control, some price hikes have already happened. So that may have a positive impact on their margins. And, if, inflation doesn't go up as earlier, as what was anticipated earlier, and interest rates are remaining low, I think that FMCG space is one space where valuations are still not as expensive what has been the long-term average. So that is also supporting them. So I feel that one should be positive as far as FMCG is concerned.
Kunal, let me come to you with regard to auto. What's the take there within the auto pack? Any favorites? I mean, you've seen a decent move, at least within the auto OEMs. But what about auto ancillaries? Curious to know about those.
So yeah, that's a very, very interesting space because, there's been a streak of outperformance from the auto pack in the last 2-3 months, the likes of Samadna, Motherson, Sona, BLW, etc. I think there are so many stocks which have done very well for themselves and they've picked up very good price action. In fact, many of these stocks are respectively on the verge of breakout of their 52-week highs or lifetime highs. So if there's one space which has actually been a lot more consistent, and that's the auto anch space. There are many stocks which are looking very attractive. The 2 key prominent names which I do track from this pack is Sona BLW as well as Samadna Motherson. I would still believe that both of these stocks are looking fairly attractive at the current juncture. In fact, what had happened was over the previous 6 months, 1 year kind of a time frame, these stocks went to a 20%, 30% correction from their 2024 highs. And now these stocks have come back into recovering almost all of the losses which these stocks had incurred over the last 6 months to 1 year. And more than that, the breakouts which have happened for these stocks translates now to the weekly and the monthly time frame. So that indicates that we are looking at not just a trend reversal for these stocks, but more of a longer term trend building into these names. So that's why I would believe that the auto anch space would continue to do very well for itself. The 2 names which I do track are the ones which I would recommend at the current juncture.
Kunal, can we also look at some of the OMCs as well? We've seen crude stabilizing now around $70, but price in correction is not going to come in. So, are you seeing some momentum coming back to OMCs now that the losses will be lower?
See, I was actually looking at this data point, and there is a very strong possibility that the OMC should start to now recover. But the fact is that the data on the open interest front, the data on the price front, on the delivery volumes is not very, very encouraging because, what's actually happening is that these stocks are due for a turnaround, but that, pending turnaround is not getting translated into positions being built up into these names. So it's like more of traders are waiting for the prices to break out of their immediate swing highs. Then I would believe that, the acceleration could happen for these OMC names. So these stocks, for example, IOC, HPCL, BPCL, these stocks are still 5% to 7% away from their first immediate swing resistances. And when we talk of this as comparison to when crude oil prices were, say, end of February when the war started off, and if you're looking at almost like a full retracement for crude oil prices in that sense, then these OMC stocks have to recover at least 15 to 20% from where they are currently. So I would sense that the markets are just waiting for that initial 4-5% move for these OMC names. Once that comes in, that's where I would believe participation would come into these sectors.
Okay, let's address metals as well. And it's really about all the Q1 updates that we're getting from various companies and sectors. In fact, Ashesha is here to highlight what we've heard from a Coal India, from a JTL Industries, from an NMDC as well.
Well, yes, first up, let's talk about Coal India, which has reported weak data on a year-on-year basis. If we compare the production number, that has declined by about 1%, and offtake too has declined by about 8% on a year-on-year basis. But the silver lining here is that inventory continues to remain in comfortable position. It is at 14 days now versus long-term average of about 13 days. In fact, MK has come out with a report and they are expecting production to revive in the second half of FY27, and they've given very strong guidance when it comes to the full year production. So keep an eye out on Coal India. But remember, they've also won an order worth about 2,831 crores. So two separate news pieces because of which Coal India will be in focus today. Shifting focus to JTL Industries then, it has reported 18% YOI growth as far as sales are concerned in the first quarter of FY27. And this was supported not only by domestic demand but also by exports, which gained momentum in this quarter. They're saying exports demand continued to aid total overall growth for the company that it has reported. Domestic markets were the primary growth driver, but exports also contributed. So that is another factor that you need to keep an eye out on. JTL Industries 18% YOY growth. Shifting focus to NMDC then, and that one has also reported steady production data. Sales have risen by about 11% YOY. In fact, production has risen by a solid 44% on a year-on-year basis. So yes, keep an eye out on NMDC as well on the back of its operational data for the first quarter.
Okay, thank you so much for that, Ashesha. And you know, metals, Kunal, in general, have also been a bit of a drag, right? And understandably so. Over the last month or so, metal prices have fallen 6 to 8% on the spot market globally. What's the take now? We've seen a sizable correction in the likes of Tata Steel. Frontline names falling 10, 15%. Good time?
It's a good time to buy into these names, but I'm not sure that the momentum is there or the kick is there into these stocks where these stocks can lift off and come back to their previous swing highs. You know, I think one of the reasons which I can probably add on is that the dollar index, which spiked up from 99 to 101 plus, I think also added to one of the concerns for these metal stocks, because otherwise the metal stocks in the sector were doing very well for themselves over the last many months. So I think in that sense, it was a bit of a surprise to see these metal stocks underperforming when the markets started to show signs of recovery. But now many of these stocks, now Hindalco, for example, the stock which has been one of the better performers from the entire metal pack, that stock has also gone to a correction of more than 15 to 17%. Vedanta has gone through, I think, a 30% correction or 25% correction last I had seen. These are big corrections for these metal names. But you know, what's happened is that many of these stocks have come back to their 50 DMAs and their 200 moving averages in this phase of correction. So risk reward is attractive for someone who missed out in the previous leg to try and buy these metal names. But I'm not sure with momentum at play that you are going to see an immediate reprieve into these stocks.
I'm also curious to know, Neeraj, you know, some of these value retailers, they've also come out with numbers, very decent set of numbers. I'll quickly pull out those numbers as well. V2 retail revenue growth of 58% YOY, while same-store sales growth isn't as impressive, but just the store count increase, 60 stores added in the current quarter. It's clearly looking very strong. Even V-Mart on that slightly higher base has done 23% YOY with a far stronger same-store sales growth of 9%. Is this a pocket which you'd be interested in? Because very likely one is scale and the other is operating efficiency. Both of those will likely play out.
Yeah, the numbers have been pretty good, the update that we got. You know, again, this will be again stock specific. We have to check what stock at what valuation you'd like to buy, because, you know, these stocks normally trade at a premium. So, you know, to get that kind of, you know, extra return or a beta from these stocks gets a little difficult. So valuation, again, will be important to check as far as these stocks are concerned.
That's the take coming in on some of those very buzzing spaces. We'll take a very quick break on that note. Let's just revisit where the Nifty implied open is, because it's still indicating you know, a comfortable level for us right now. And the GIFT Nifty is indicating a healthy start for us, well above the 24,100 mark in trade. We'll take a very quick break. We'll continue tracking markets on the other side.